Okay. Now you see the news came on this candle, on this bar. And what did you see before the news? Hmm?
High volume.
Effort was no result, right? Effort was no result. And there is this kind of distribution top, right? If you just make the source of this move was actually the upthrust, followed by this one. And then the news came and price followed the direction of the news. Got it?
Yeah.
Okay. All right. So oftentimes uh, the the directions can be expanded. So now here we have, all right, now 8 p.m. Now what happens? Now this trade has been done, right? If you can predict it easily, it is an upthrust, you can go short here. So obviously, so you know, like what people do, that whenever there's a tight range and when you see such type of news, people go for two directions. What do people do? That this is a range here. People place one position over here with stop loss above like this. All right. And second position over here with stop loss right over like this. Okay. Okay. So what happens? Whatever direction the price breaks through, right? In the news. All right. So they will buy the limit order here. You know, limit order, pending order. They will buy the pending order. Buy pending order, selling pending order. Got it? Two ways. So whatever price, for example, our pending order is over here. When the price breaks out to this level and hits this pending order, it will go down. We will catch this entire move. And if the price breaks out to the upside and our limit pending order is executed, okay, then the price will go all the way up. We call this strategy as a straddle strategy. Most of the hedge funds, they do like this. They place buy order and sell order. Now, I'm not asking, they're not buying over here. They're not buying on the market. They are just placing buy. For example, it's an alert. I place a pending order over here. Trade, you will see buy this limit order. Can you see limit order?
Yeah.
Okay. So I will buy stop order. So I will buy my order over here. Okay. This one. Okay. Now my buy order is so whenever the price reaches this level, this buy order will automatically execute and the price will catch this entire move. Similarly, I can place my sell order right over here before the news. When the news comes out, sell order. So whenever the price just breaks through it, this all order. So what happens? This order will not execute because the price never go up, right? And the price either like break out in this direction. So this order will execute and I will catch this entire direction to the downside, right? This is one of the ways to trade the news. It's a little bit risk. It's not risky if you have a stop loss here, then you don't need to be afraid, right? If your stop loss is hit, right? If your one position hit, you have another position too. Your news, the market will follow the other direction and you will make money on this position, right? So there are two possible scenarios, three possible scenarios. Scenario one, that your buy order is executed and your sell order is never executed. Okay, right? Number two, your sell order is executed and your buy order is never executed. Okay. Number third scenario, okay, the price comes down on the news, forms a spring, your sell order is executed, hit your stop loss, okay, and then go up, and then your buy order executed, and the price went in your favor. So you make approximately 2R from this. Got it?
Yeah.
Do you understand? Do you, for example, if your sell order is here, the price comes down here. For example, if there's a buy order, the price goes up, hits your buy order, your stop loss is here, you are in a buying position, but the price reverse, hits your stop loss, goes down, takes out your sell order, and the price keeps on going down. So you lose money over this trade, which is 1%. You make money around 3 to 4% on this trade. So net, you make around 4%. This is the worst case scenario. In the best case scenario, the price never reached your buy order, but it hit your, but it reaches your sell order, and then you make money from this trade. Or it never hit your sell order and it hits your buy order and you make money from this trade. Got it? So these are the three possible scenarios. Okay.
Okay.
All right. Now let's go to the 15-minute time frame. Let me cancel it. Okay. All right. When we will do some back testing, then I will tell you how to trade the news and everything. Okay. Okay. Now, can you tell me after the learner is open? Okay. Now, what kind of structure? It's very hard to see the structure at 9, right? What do you see? The price is straight away coming down. Did you see any structure here? No.
No.
All we see is a very sharp move. But we know one thing, whenever we have a sharp move, okay, to the downside is a sudden acceleration. So there can be a kind of, what to say, a climatic move, okay? This is a selling climax move, right? A sharp move indicates a selling climax move, but we don't have the structure on the 15-minute time frame. So if we don't have the structure on the 15-minute time frame, what do? We go to the
5-minute.
5-minute time frame and see if we can draw the structure. Okay. And this is what happens. What do we see here? The price is coming down and coming down in this region, right? Okay. Yeah. Still, it's a little bit hard to draw the structure on a 5-minute as well. But yeah, okay. I can see that the price is just having a shortening of the thrust here. This is all I can see. Am I right? On a 5-minute time frame, I just identify the price is having a shortening of the thrust, right?
Yep.
Okay. And now if we go to the 3-minute time frame for further refinement, now possibly we can find the structure. And now the structure is very possible. Yes, we do have a shortening of the thrust here. Okay. All right. We do have a shortening of the thrust here. All right. SOT. And if we have an SOT here, what we can do, we can draw this channel like this. Reverse is the trend line, right? We have SOT. Okay. The price has SOT. And what happens after SOT? The price, we draw this line. Okay. We connect this point and this point here. Draw the channel. We draw SOT line. This is SOT. We know this. Volumes are very high. You can see. Very high volume in the background, high volume in the background, above the average, you can see, very high volume, very high volume. So what do you see? This first touch here, second touch here, third touch here. After third touch, what do? I told you. We draw this structure. Right? And we call this as selling climax. Okay? This up move to the upside would be AR. Okay? Right? And this one would be the price came back. Okay? And forms what? Price was not able to. Now here we have minor what? We have minor JAC. Right? And of course, JAC of this point. We have JAC of here, of this channel, right? And we have a spring here. And this whole move is also a spring of this move, right? Right?
Yep.
Spring of this, the price went down and we have 3 to 4 bar spring. The price returned back on this. So this entire move is a spring. And we can see a very heavy volume on the springs. And then the price, and this is a reference level. We already have the reference level here. Why this reference level? Why do we have this reference level? Because we have, first of all, first touch, second touch, third touch. So on the third touch, we draw this straight line and we call this as line of demand. Got it? The price spring line of demand, and then comes back and tests this region. Where do we get test after this region? We get test right over here, right? And what is this bar? What is this bar essentially known as?
Spring.
Huh? This bar. Test effort versus no result.
Oh, yeah. Okay.
EVNR. Effort versus no result. Now we have essentially effort versus no result over here. A very simple trade. You're gonna do what? You're gonna just put your stop loss right below here, the last low, which is this one. Okay. Because this is the last low of the candle here. You can see last low. Place a stop loss right over here. Okay. And take profit. Well, we don't have a take profit anymore, but I would just suggest in this case just 2R. Got it? So we have 2R from here, 3R from here, 2R, 3 to 4R from this downtrend. And of course, you can also take this trade. And this was actually when there was upthrust here on this channel, when this channel was formed. This huge bar was what? FTI, right? Falling through eyes. If this was FTI, then of course, what happened after this bar? What is this? Reaccumulation. Redistribution. Right? If we have a redistribution, we come down here, breakout, 2-bar top reversal here. We can enter a position and go back down here, 2R. Got it? This is how you're going to trade this. Any confusion so far?
No.
No. Okay, then let's go for the last session as well. Okay. Okay, this one. And now the last day was, which day was it? Fourth. On 4th of August, you're going to identify the New York Open. Your time, 8. Okay, this first one. And then the next one is 9. Right? This and this. So what are you going to do? What do we see here? We see a huge bar, the same like this, before. And the news came before. Okay? And this is a London, because it's a London news. Okay? And the huge news. And then what do we see here? The price makes a huge volume, closes on this one, and the price is doing what? What do we see here? SOT. Am I right?
Yeah.
Okay. We go to the 5-minute time frame and confirm if it's an SOT or not. Yes, this is SOT. This is SOT. SOT is confirmed on a 5-minute time frame. First touch, second touch. Okay, first touch, second touch, third touch. And after third touch, what happened? So you have this reference line. Okay. So what do we have here on a 5-minute time frame after New York Open? SOT, right? And this SOT gives you what direction? Gives you what? And at
Bullish.
8 p.m., you see the price forms this first touch, second touch, third touch, you draw a straight line, and then the New York opens, right? And you see increased volume here as well. So price will come and test this region, but the price never came, and the price makes a higher low, right? The price makes a higher low right over here. So this becomes selling climax. Okay. This becomes AR, right?
Yeah.
Okay. This entire becomes SOT. Okay. Now we go to the 3-minute time frame, and now you will see things will make sense now. Okay. SOT here, SOT. Okay. And now this is the first secondary test. Secondary test has what? Higher low. Am I right?
Yeah.
So as I told you, whenever the secondary test has higher low, what will happen? We will draw this line here and test here. And now, once we test this region here, after selling climb, because we could not test the selling climax region, but we tested this second reference line of secondary test. What do we have here? Effort versus no result. This is enough indication for you to go long, right? You just go long here. Nothing to think about it. No, no, and your stop loss would go just below here. Simple as that. This is SL. Your take profit, just go as high as this one, last high, maybe this one. 2R. Got it? Because we don't have the target here, because ultimately the price would go to this part, you can see. But it does not mean that you have to target the absolute high like this one, right? So you only have to target 2R because we don't know which target to take here. So I would just essentially, if you take this target here, let's suppose this target. So what happens? You're gonna scare all the way here because the price just comes back, rotate, and then hit your stop loss, hit your take profit after a very long time. But if you have a smaller target of 2 to 3R, let's suppose. Got it? 2.5R or 2R, you're gonna make your money here. Got it? Right? And now, of course, what we see here, the price is just, like the price is just making here. So yes, you can join this line and this line right over here. And of course, this becomes JAC, right? This becomes JAC from this one,
Yeah, right.
right? If you just draw this one, match, because this is SOT, so we don't know where to draw channel. We cannot draw the channel over here. But if you connect this one, now this becomes the structure. This becomes what? JAC. You can say increasing volume. You can see the volume increases, the spread increases, this becomes JAC. So what happens after JAC? Can you tell me? The price does what after JAC? Reaccumulation. Then price exactly did the reaccumulation here, of course, and then here, the last point. And then what happened? What did we see here? This is the second entry point. After key reversal, you can enter over here and go back all the way up to the last side. Got it? And you can also make the larger structure if you want to draw the larger structure. The highest absolute point was this one, right? Because the price went from here. This reaccumulation structure was very, very minor, so we're not taking into account. This one and this one makes fine. Okay, right? So what happens here? So this is where the London opens here. There's a second New York opening. Okay, post-market opening. And what do we see here? The price is just breaking through it. Higher volume coming from the top. The price is returning. And the price tests this region on a no demand. So obviously after New York opening, if you want to take this trade, you can take this trade, placing your stop loss here, take profit just right over here on this line, and then you make a 3.41R. But your bias is what? This is your short-term bias. Your immediate bias is what?
Bullish.
Bullish, correct. So what happens here? This first point here, and here we see spring setup right over here. Okay, the price comes down, and then you can, okay, spring, test of spring, and after the test of spring, you can essentially take this higher low here, and now you know what happens here. Afterwards, no result. You can take this one entry. Yes, you can take afterwards, no result. You can take entry to upside. This one, yes, you can take this entry, or you can take this entry. We have multiple entries. Got it? And you will notice one more thing. After spring, what are we seeing here? Can you identify this pattern?
VCP.
Yes, VCP pattern. And as you know, during a VCP pattern, we're gonna just, like this is the last trade here. all the way up. So now the price breaks through this structure high as well. And obviously, when this price breaks through this structure high, you can see there is an increasing volume, increasing spread. What does this qualify as? Jump across a creek, right? And whenever we have a jump across a creek, what do we have here? The reaccumulation pattern. Now you will think, okay, should I take this trade or not? Yeah. So what happens? The price, this upthrust. Would you take this upthrust? No, I will not take it. Because this is jump across the creek against the bias. Got it? Against the short-term bias. So we have this one here. The price breaks through this region, this reaccumulation region, and then the price reversed here. 2-bar top reversal. Can you see?
Yep.
2-bar top reversal. You can enter right over here and go all the way to the upside. Place your stop light over here. Last entry of the New York session. Okay. And of course, I told you whenever I told you one technique. What technique did I tell you yesterday? That if we have a 2-bar top reversal, or when the entry bar is very high, what you can do, and you can see that it qualifies. Okay, we have a high volume, it qualifies the 2-bar top reversal, but the bar is a little bit higher. And because it's a narrow range, and you see that this is very narrow range, right? So obviously the spring of this narrow range will produce higher result. It will not come back and test this region, right? So the price will keep on going up. And we have to enter this entry. How would we enter? I told you yesterday. What we gonna do?
Fibonacci.
Fibonacci retracement tool. Yeah. Okay, so we're gonna grab this tool. Okay, we'll measure the height from here to here to the upside. We go to the settings. Okay, 0.618, and this one. Got it? Now I just uncheck 0 and 1. It's all right. So I just do it black. Black is better. Okay, go down. Okay, go for percentage, and don't do reverse. Don't do reverse. Uncheck the reverse. Okay, and uncheck the background. So remove this background check. Remove this reverse check. In the prices, yes. Labels, you will have values and percentage. So you'll go for percentage. All right, and then click on OK. So 52. So where is the midpoint? 52, this one, right? So if you're gonna place your stop loss right over here, you're gonna place just below this level, just below these two levels, 50 and 61.8, right? Right over here. And this is the way you can target much more higher. Make sense?
Yeah.
Okay, this is how you're gonna trade. And the price went up. A very huge reaccumulation again. And again, once again, what do we see here? The price breaks through it on an increasing volume. And what are you seeing here on an increasing volume? What do we see here? Again, price breaks the last level. And the price comes back, test it, and then what do we have here? Key reversal. This is another
Key
entry
reversal.
point. Okay. And of course, key reversal after what? The price comes down prematurely, and you know that if we extend this line, right over here, you know that if this is JAC, then this becomes what?
Reaccumulation.
Yeah, of course, this is JAC. Then this, when the price is coming down, this becomes what? LPS, right? So there is a reaccumulation again during LPS session. You can see we have reaccumulation here, and during the reaccumulation phase, we do not have any any kind of where we can enter a trade, right? But what do we notice here? One thing we notice here, this one, this one, this one. What are we seeing here? A VCP pattern here, and then huge. We go back up again. Got it? So this is a good part of the New York session that you only experience, that you only have to take care of the long-term bias. Oh, sorry, the immediate bias. Any questions so far?
No.
No. 15-minute time frame again. Let's see and do the last one, 2 August, just randomly 2 August. Now you're going to tell me, okay? Okay, I draw the line at which part here? First of all, 8 p.m. your time, and then 9 p.m. your time, okay? Before the session, what do I see? The price is forming in a swing, you can see. Right?
Yep.
So I can draw the channel from here to here. This first low, second low from here, right? Okay. Just drawing the channel. Yeah. And I can see the channel is, and I can see one more thing. If you can see, if you draw the line from here, 1 point, second point, third point, I can see that there might be a potential
SOT.
SOT, right? We also join this and this, right? So we don't know whether it will be SOT or not, but we just join it, right? We see this line here, right? We just join these two. Okay, got it? And extend it. So let's see what happens in the future. We don't know yet. So we go to the 5-minute time frame, refine the structure, and now the structure will be refined much more better, in a better way. Okay. All right. So what happens here? The price comes back. The SOT here is not completed. Why? Because we have one touch, second touch, right? Third touch is not reached. So we do not have SOT yet now. And then the London session opens here. What do you see before the London session? A huge, sorry, the New York session. Key reversal. Am I right? And then the New York session opens. And you can see the volume on both. So it means there is a buying. And we are in the middle of what? We are in the middle of trend channel, upward trend channel. I told you whenever we are in the middle of the trend channel and no SOT is formed and no overbought is formed. So in this situation, okay, in this situation, what happens? The price is what? Doing what? The price is in reaccumulation stage, right?
Okay. Yeah.
So because we are between the channel and no SOT and no oversold is no overbought is reached. So we draw this line from the last high, this one. Okay. All right. And then the last high obviously was reached here. We draw this channel from this top and this bottom. And what do we see here? Spring. Okay, spring, test here. And then we have this first settings here. So either you can enter right over here after the test. This is effortless no result right over here. You can see effortless no result. You can enter right over here. Test, you can enter right over here, or you can enter right over here. No demand. Right? All of these three are right. You can enter right over here. You can enter right over here. You can enter here, or you can enter here. Right? So obviously, I will go to the 3-minute time frame to see if I can get the perfect entry. Do you understand?
Yes.
And now I think we got the perfect entry already. Yeah. This one here. This one. Here. Spring goes up. Spring goes up. And then we have no demand here. No demand here. This no demand. After spring test, and there's no demand. It's a perfect entry here. Can you see? Sorry, no supply. Or this no supply. Right? Both of these are two good entries. And it comes right on the reference line. So what will happen? The price will just shoot up. Got it? And this is our last low. So obviously we will measure our last stop loss and this one. Got it? 2.59 hour, 2.5 hour. And now what happens that again, the London session, the second post New York session opens at this point. What do we see here? We see the price is kind of doing up thrust. Yes. But can we trade it right now? Because we are in distribution phase, we cannot trade it like this because the bias is distribution. Oh, sorry, accumulation, reaccumulation, right? And then when we see this is a SOT line, you can draw this line as dotted line. Price does what? Price reaches SOT line, third touch, right? After this one, open. You will not take this trade because this trade does not have any significance. Does it have any significance? Any very high volumes of that? Nothing, right? And we have a reaccumulation in the background. So we will not take this up thrust, right? And this is the SOT line.
Yeah.
We know that the price is reaching SOT line. So we'll wait and see what happens. So what happens? The price, once the price crosses SOT line, what do we see here? After SOT line, this effort versus no result. Am I right? This one.
Versus no result.
After crossing this SOT line, we have effort versus no result, and then the price comes down. And 2-bar reversal as well. Price comes down. Now, can you test it out? Okay. Right? The price comes back here. The price will either test this region or the price will either test this SOT line. So what happens? The price tests this SOT line, and what do we have? Can you tell me?
So versus no result.
Yeah, and this becomes what? Buying climax, right? After SOT is reached.
Yep.
And this becomes what? AR,
AR.
right? This becomes what? Secondary test.
Secondary.
A secondary test happens in what? Effort versus no
Lower
result.
highs.
Yeah, lower highs, and it is effort versus no result. And plus, it is on the reference line. This SOT line is also the reference line. And we have effort versus no result here. So we have enough information to go short. Am I right or wrong?
Yeah, correct.
Yeah, we just place our stop loss right over here. And obviously we go down. Simple, you see? So the bias, so we only follow the immediate bias during the New York session. And then the news comes out right over here and the bias is changed. Okay. If you want to see how the bias is changed, if you want to draw the channel, you draw the channel from here to here. Okay. And now you can see the news comes out at this point, very high volume, the price becomes oversold, right? And then this becomes AR, jump across the creek and test of this one, LPS, price goes up, right or wrong?
Yeah, correct.
Yeah, so that's it. That's it. If you have any question, you can ask.
All right, Ken, thank you.
Okay, okay. So, so what you have to do now, I'm talking about the assignment, right? Your assignment for this week is, this upcoming week, you have to analyze the last 10 to 15 London session. For example, you have to analyze from, you have to do the same thing, right? Whatever I've taught you for the New York session, sorry, whatever I've taught you for the London session. Okay. Okay, so let's make it easy. Last 10 days of New York session, last 10 days of London session, this whole week, this upcoming next week. Got it?
Maybe I'll do from coming Monday until Friday, and then the past, and then last week's Monday to Friday.
Let me see. Now let's see from here, Monday, right? So Monday to Friday,
Yeah.
1, 2, 3, 4, 5. This whole 5, then 7, then 5, 4, 3, 2, 1. Okay, yeah. Until 1 to next week, this one, right? And then we will discuss everything on Saturday and Sunday. This Tuesday or Wednesday, I will let you know, we will hold one more webinar in which I will tell you about risk management and those things, right? So what you have to do,
Best time would be Tuesday.
Yeah, okay. Tuesday I will hold. All right. So on Saturday again we will meet after Tuesday. Okay. On then next Saturday we'll meet again on the webinar, and then we will discuss everything. And then we will finally go to the back testing. After back testing, then prop firm. Got it?
Yep.
Okay. All right. So I finished the webinar and I will upload this video on the YouTube, and I will also upload the yesterday webinar on the YouTube. Okay.
All right.
Okay.
Thank you
Bye
so
bye.
much.
Bye bye. You're welcome.